Hello, and thanks for watching this Cloud9 ERP Solutions video and subscribing to our YouTube channel. In this video, we're going to show you how to handle customer credits, create credit memos, and learn how to apply them against existing customer invoices. So there's two basic scenarios. One is where we provide the customer an actual credit memo. With it, we email it out, there's a credit memo number, and the customer knows about what we're doing. And then the other basic principle is we're applying a customer credit to clean up the books. Whether it's a write-off of an invoice or something we did internally, the customer hasn't seen it yet or doesn't need to see it, we're just going to eliminate it from our books with all the audit history necessary. We're just going to apply it to an existing invoice, and so that we can see it internally, but it never gets out to the customer. So let's get started. The first screen I'd like to show is the customer details screen. I love the screen because it gives you the ability to see anything outstanding. So for example, if we open up Toy Star America, what you can see here are all documents that have a balance greater than 0. So you can see the currency balance here. I'll slide that over. You can see the original amount and the balance. And if we click on show all documents, it shows you a history. So even things with 0 balance will then show up. Now you'll notice I've created a couple of filter tabs. I like to separate these documents by invoices and payments. So for example, if I click on invoices, I can see all my invoices here. If I click on payments, I don't have anything because typically payments are fully applied. There's no balance on them. But again, when I'm talking to a customer and I want to see history, if I click on show all documents, I can see all of the payments the customer has sent us. But moving forward, this is a great screen we can return back to and see the results of how we've applied these credit balances. So the first thing we can do is we can go into here and create an invoice. Now this will bring us to the invoice screen and actually select the customer, but the invoice type, being a credit memo, will be incorrect. So we'll do it. But keep in mind, as soon as we change this to a credit memo, we're going to end up losing the customer anyway. So this could be the date of the invoice if we wanted to. The post period is up to you. So if you want this to post in a different period, then you could adjust that accordingly. Otherwise, it'll follow the date of the credit memo. So we'll pick our Star America toys. We'll add our line item here. Keep in mind, what we're talking about today is simply invoices. We're not moving product back and forth. For that, take a look at our videos on how to handle RMAs. But essentially, we'll go over here and we'll say, all right, well, this is going to be a $500 credit. And we'll choose an account that we're going to pull out of, and that'll be sales revenue, if that's what it is. If it's something else, further in this video, we're going to talk about write-offs where we might use a different GL account. So we'll save it and release it. Now, one thing I neglected to show is you might put a nice description in here as to why you're giving that credit memo. I can still do it here. And I used an example of a rebate. In that case, I might use a different GL account. But I'll click OK here, and at least the notes there. You could modify Acumatica so that the description field is something you can change after the fact. In this case, by default, it's not. Now, if I go back to customer details and bring up the customer, you can now see our credit memo of $500. So now the question is, if we go back to our original slides, what are we going to do? Are we going to let them apply it to the next payment? Or are we going to apply it to an existing invoice already? So we'll go back. Now, if we're going to let the customer apply it to an existing invoice, we simply need to email this out to the customer so that they have it in the records, and so that later when they make a payment and we're looking at their check stub, we can apply it accordingly. So this is what that looks like. If we go back, we've emailed it to the customer. Now we have a check in our hand. We'll enter a new payment, pick our application date, which is, generally a day or so before today's. Put the check number in, pick our customer. And then here, let's say the customer's check stub was paying invoice 13173. We can check that off. And then on top of that, they're noting that they're applying credit memo 13443. So you could check that too. And when you do that, you can see the balance is updated accordingly. We can hit the refresh button. And now this is the payment we're taking from the customer. And that'll go into our deposit later on in the process. So that's one way. But if we go to our second example, we'll apply it to an existing invoice and simply let the customer know. Let's do that now. So in this case, we'll delete the payment so we could still use that credit memo. We don't want it hanging out there on a document. And instead of picking a payment type, we're not getting a payment from the customer. Instead, we're applying a credit memo. So just to be clear, this is a payment document, but the type of the payment is credit memo. We select the customer's credit memo right here. We could scroll over to the right to make sure. It picks up the customer. Again, we can change the application date and the period if we need to. And then we can add our line and select the invoice we want to apply it against. We can scroll over and find out which one. Notice we're applying $500. That'll subtract $500 from the balance of this invoice. And then we could release this, and it's done accordingly. Now, keep in mind, payments, as soon as you release them, documents to apply, future tense, everything disappears here. But if we go to application history and we scroll over, you can see what's applied. If we open up the invoice and we click on the applications tab, once again, we can see that this credit memo has been applied to it. Now, this invoice, you can also see, has some additional history. A payment was applied back in April for $5,000 as well. So you'll see all of the documents that are being applied against this invoice as well. Now let's take a look at our final example. In this example, we're simply applying a customer credit to clean up the books. So let's go back. We'll close our invoice. And the first example is actually what we just did. We created a credit memo. We never emailed it to the customer though, and we simply created this credit memo application to the existing invoice. The only difference is, and if we go back to our credit memo, one thing we might do is we might check off don't email. So if you have any processes that automatically email out invoices and credit memos, you may want to mark this as don't email so that it doesn't go out to the customer. This is just for internal purposes. But that's an example of we created a $500 credit memo and we applied it, and the customer didn't really know anything about it. Now, in that example, this customer already received that big invoice. But what if we've created an invoice and we need to make an adjustment to that? Or what if we no longer have the customer and we need to make an adjustment? We'll go back to customer details and let's bring up another customer. Maybe this customer right here. And we have a couple of invoices. Now, if we open one up, let's say we just created this invoice. We have a couple of options here. The first is we can do a reverse. Now, what a reverse actually does, if we select it, is it takes the contents of that invoice and it creates a credit memo out of it. Now, we would use this process if we needed the credit memo to email it out to the customer and then have them pay it in their own time. But let's say, for example, we wanted to instead simply just apply it internally. Maybe we just made the invoice and it's a mistake. We'll close this. We'll open the invoice back up. And we can use this other option, reverse and apply to memo. Now, if we take this and we release it, Acumatica will release this credit memo, but it'll also create a document to apply this against the original invoice. So when we click on applications, the invoice is applied. There's zero balance on the credit memo. And if we go back and we refresh, you're going to see that that invoice goes away because we don't have show all documents checked. So that's one way we could just take care of that initial invoice, and we still have the invoice and the credit memo for audit purposes, but we can simply get rid of it before the customer ever sees it. And remember, under the financial tab of an invoice or a credit memo or any final document, there's an option to do not email. So you don't necessarily want that email going out if the invoice was created as an accident. The last thing we could do, and we'll use Braskeys final invoice here, is if we open up that invoice, we have an option to write off an invoice. And that's an option right here. Now, if we select it, you'll notice we get an error message. Write-offs allow you to do quick transactions to alter the balances of invoices. It's very quick and easy. However, the customer itself has a preference to be able to do that. So if we open up the customer's profile and we go to financials, you can see here we've enabled write-offs for this customer. This is undoubtedly pulled in from the customer class local. So you can change that preference if you want all future customers to get this turned on. But additionally, the write-off limit. So now Acumatica has this $10 write-off limit, but the invoice itself was far bigger than that. It's $13,000 plus. So if we wanted to be able to write this off, we can increase this amount to a larger one, hit the save button, and then select our write-off. And Acumatica brings us to the write-off balances and credits screen. And there we can see all of the invoices that match our filter at the top. So this is a balance write-off. This is the date of the document. Should we choose to write this off, that's the date of the transaction, along with this post period. And this is the customer we're filtering on. This is the reason code. So what does that mean? Well, if we go to reason codes and we take a look, balance write-off, we open it up, it will hit and use this GL account for the purposes of our write-off. So our transaction is going to be to credit our accounts receivable, but then we're going to debit this GL account for an expense. So if we go back, we can check this off and process this write-off. Now keep in mind, you can also get to this screen from the receivables menu, and you can process a bunch of invoices that you want to write off. Maybe you have a lot of dollar or under dollar invoices that you want to just get rid of. You can do that through this screen. But in this case, we'll click the process button. Now, if we go back and refresh, you notice that we don't see the invoice anymore. If we click show all documents, you can see that balance write-off. It's a transaction in the system. It once again uses the payment screen, but instead of being a credit memo, it's a balance write-off. And if we take a look at the application history, you can see what invoice it's applied to. If we open up that invoice, you can also see under applications what actually changed this balance. It's this balance write-off. So that's how we can apply credits to customers' invoices. We talked about quite a few different scenarios as to when you might need to do these things and how to do them. So hopefully you found this video useful. If you did, please click the like button. And if you have any questions about this or anything else Acumatica, feel free to reach out to us. We'd love to hear from you. Thanks again, and have a great day.